Good morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Tuesday, April 15th. Happy tax day to all. Well, mixed trade overnight has now turned mostly lower across the ag space here this morning. Corn ranges from still holding gains of 1 to 3 cents. Wheat is down 2 to 3 in Minneapolis and in Chicago, while down about 6 to 7 cents in Kansas City. Lower across the bean complex, beans down 6 to 8 cents, meals off about $3 to $4, while bean oil that's down 15 to 20 points. The U.S. dollar is slightly higher, while crude oil and the U.S. equity markets are pointing to slightly lower trade there. Crop updates after the close yesterday showed U.S. corn plantings advanced only 2% to 4% complete. That was at the low end of expectations and below the 6% pace from a year ago. Bean plantings just getting underway, 2% of the crop seeded, 3% was where we were at a year ago. Wheat conditions did drop 1% to 47% of the crop, good to excellent. However, we also saw the percentage of the crop rated poor to very poor decline by 2%. So we saw a 3% boost to the fair category. Spring wheat seedings, they advanced to 7% complete. That is in line with recent history. Heat will be building across the U.S. Southern Plains this week, with low to mid-90s pushing as far north as central Kansas by Thursday. Upper 70s and maybe even possibly a few low 80s will push as far north as northern Illinois by Friday, before cooler temperatures and rain spread over the Easter weekend. Good rains are also expected across the southern plains, bringing relief to for the hard red winter wheat crop. Perhaps we're seeing a little bit of a break from the tariff headlines, unlikely to last, however, as nations pile up to negotiate trade deals with the Trump administration to avoid their reciprocal tariffs. Good rains are forecast from Mato Grosso and other key corn growing areas in west central Brazil, keeping crop prospects there rather high. Too much moisture and humidity has been slowing harvest operations in Argentina. July 25 corn that closed lower yesterday, ending a run of 7 consecutive higher closes. While prices are steady right now, we have so far held above yesterday's low. Export inspections yesterday at 72 million bushels. That was at the high end of expectations, actually above expectations, and the second highest for the marketing year. Export demand should remain strong into the early to mid-summer months ahead of Brazil's second harvest. I look for old crop prices to continue to outperform new crop, with July moving back above that $5 level and possibly even retesting the 521 high back in February. Bean complex lower across the board. Crush margins were crushed yesterday, falling 16 cents to $1.21.5 a bushel. That ahead of today's NOPA crush data at 11 o'clock Central Standard Time. NOPA members are expected to have processed about 198 million bushels of beans last month. If realized, that would be a record for the month of March. Bean oil stocks are expected to have jumped about 7.5% to just over 1.6 billion pounds. Wire services are reporting here this morning overnight that the Chinese government has ordered their airlines to stop accepting deliveries of Boeing planes, that in response to the U.S. Government tariffs. With July beans, they've fallen back to its 50-day moving average. Next support's at the 100-day at 10.38, and meals fallen back below that $300 per ton level on the July futures. KC wheat, that is held support above its low for the month at 562 3/4. Minneapolis is hovering near its 100-day moving average. I look for Minneapolis to be the strongest of the three classes of wheat. Thanks for listening, everyone. Hope you have a great day.